Welcome to the ultimate guide to candlestick patterns, episode 5. In previous episodes, I explained that candlesticks and candlestick patterns alone are useless and they must be used in conjunction with other tools and concepts in technical analysis for any trading decision. In this episode, we're going to examine candlestick patterns in conjunction with support and resistance levels, and you will learn how candlesticks are used with these levels. Stay tuned and let's get started. Support and resistance levels are areas where the forces of supply and demand meet. There is a balance and a trade-off between forces of buyers and sellers in these levels. Actually, support and resistance levels are areas where the bulls and the bears have set up their defenses, and these levels act as a barrier and they prevent the price to move further in its direction. You may ask how it makes sense. Let me explain it. In support level, demand is strong enough to stop the declining of the price. It means that in support levels, the price gets difficulty to break this level and go lower, and buyers step in and take the control of the price and push the price up, and the bulls become in control. Because when the price gets closer and closer to support levels, it actually means it's becoming cheaper and cheaper. And because historically this level was bottom, so buyers see it a good deal to buy at this level. And on the other hand, sellers see it very cheap and not interested to sell at those cheap prices. And they don't see it a good deal because historically this level was bottom, and after that the price advanced. So what happens now? On one hand, buying interest increases, and on the other hand, selling interest decreases at support level, and this means that demand becomes greater than supply, and this causes the price to go higher. This is how a support level prevents the prices to go lower. The same interpretation is applied for resistance level, but in the opposite direction. When the price gets closer to resistance level, it actually means it's becoming more expensive, and because historically this level was top and after that the price went down, so buyers don't show interest at this high price and they wait in hope of lower prices. And on the other hand, sellers see this level as good price and selling interest increases. So here supply becomes greater than demand, and this causes the price to go down, and this is how a resistance level prevents the prices to go higher. As I've already explained in previous episodes, a candlestick or a candlestick pattern shows what happened between buyers and sellers in a period of time and what's their status, who had the upper hand, and what could be the possible next move. So forming a bullish pattern near a support level or a bearish pattern near a resistance level can be a good indication that the market participants are reacting to those levels, and this gives us a significant signal that the price is going to possibly advance in the case of support level or decline in the case of resistance level. For example, on this chart, as you can see, we have an established trading range and traders are perfectly reacting to this support and resistance levels. So when we see the price is reaching to this resistance level, the first thing that comes to our mind is that the price is going to reverse after hitting this resistance level. One way to realize when this is going to happen is looking at candlesticks or candlestick patterns forming near these resistance level. If you remember from the previous episodes, I said that a candlestick or a candlestick pattern show what's the result of the battle between buyers and sellers in a period of time, and they also show what possibly could be the next move. Only possibility, nothing more. And that's why I said that they must be used in conjunction with other tools or concepts of technical analysis to give us a potentially higher probability forecast. So when we see a bearish candle like this shooting star that forms on the chart near resistance level, it tells us that the market participants are reacting to this resistance level. Forming this candle in the top shows increased selling pressure, higher selling pressure in compared to buying pressure, and because it's near a resistance level, it gives us potentially higher probability that the price is going to reverse. Or here, as you can see, dark cloud cover form on the chart, or here bearish engulfing pattern, and here again another bearish engulfing pattern. All these patterns are bearish and they show increased selling pressure, and they indicate that the bears are in control, and this is happening near a resistance level as we expect reversing of the price at these levels. So these bearish candles and patterns that show the behavior of buyers and sellers, they tell us that the buyers and sellers are reacting to this resistance level, and considering them together, I mean forming these bearish patterns near resistance level, gives us higher probability that the price may change its direction because we have signs of increased selling pressure in resistance level, which itself, the resistance level, is a barrier and prevents the price to go higher. And here near this support level, we have hammer and bullish engulfing patterns. These are bullish patterns and they show increased buying pressure. These patterns formed near support level, which we expect from the support level that the price is going to change direction after hitting this level. And these bullish patterns show that the market participants are reacting to this support level. So by having them together, I mean forming these bullish patterns near support levels, we have higher probability that the price is going to advance because we have signs of increased buying pressure in support level, which itself, the support level, is a barrier and prevents the price to go lower. And here in this example, I want to show you an important point. As you can see, this uptrend is interrupted and stopped here, and a resistance level is formed as you see. Here, when the price reaches this resistance level, a bearish Harami cross formed on the chart, which shows increased selling pressure, and being in resistance level, it gives us the signal that the price is going to decline. But if you pay attention, the price made higher low before that, and the market has upside tendency. As you can see, the price declined, but not as much that was expected. And now, as you can see, the price is seriously making higher lows, and an ascending triangle is forming on the chart, which is a continuation pattern that forms in the middle of an uptrend, and it gives the possibility that the price is going to break this resistance level and this uptrend may continue. If you're not familiar with ascending and descending triangles, I have a video that I completely explain them, and you can watch it later after this video. Okay, getting back to this chart, as you can see, this resistance level is broken with this long green candle, which shows high buying pressure, and after that another long green candles, and this uptrend continues its direction. The point is that merely having a bearish candlestick pattern near resistance level or bullish candlestick pattern near support level doesn't mean that you're gonna get the expected result with 100% probability. And you must carefully watch the price action and constantly analyze the chart with other tools and concepts of technical analysis, and show flexibility when it's required and adapt to the current situation of the market when necessary, so you make your trading decisions with the highest possible probability of success. Alright, that's it. In this episode, we talked about candlesticks with support and resistance levels, and you learned how candlesticks show you the behavior of the market participants near these levels, and how you can identify reactions to these levels and recognize increased buying pressure near support levels or increased selling pressure near resistance levels with the help of candlesticks and candlestick patterns. Thank you for watching this video, and I hope it has been helpful for you. If you found any value in this video, please like it, please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next episode, and good luck with your trading.